Ben ritrovati giovedì mattina su floor del New York Stock Exchange, in questo momento indici in territorio positivo, ma parliamo della giornata di oggi ma anche dell'intera settimana e soprattutto di analisi tecnica con il mio ospite qui sul floor, come vedete è Derek Orth, che è Designated Market Maker per Brandon E. Cryan and Company. Derek, thank you so much for being with us.
Thanks again for having me. Pleasure.
So Derek, I was just saying, let's talk about technical analysis. It seems that we are getting far away now from that correction phase, the beginning of a correction phase that we saw just a few days ago. So where are we now technically?
Technically right now, I'm again looking at the Philadelphia Semiconductor Index as a gauge of where I think the overall NASDAQ is kind of heading. I'm using the NASDAQ as well as a gauge kind of to kind of lead the market in the direction it's going. Last time I was on a few weeks back, we were talking about a certain support level in NASDAQ. 3990 was a spot I was watching. We kind of, on the day I was on, we were rallying up to 4135 was a range that we kind of retraced back up to, but ultimately I said 3990 is an area to look for. We did get there on one flush out day. We got down around, just around that spot price, rallied up to around 4,025, 4,035, then fell back down again, and about that was like the third day after we got underneath the 39.90 zone again, got as low as 39.62, 65-ish, but we hammered back up on a closing basis, closed above the 39.90 level again, actually closed that day at about 4,000, and we've rallied since, and the NASDAQ hit 4277, which is another all-time high, recent high here. Recent high, I shouldn't say all-time high, recent high that we've put in. That being said, the semiconductors have done the same thing. They got to a certain buy point. They rallied. Now we're back up here. The stock is trading at 560. This is a level I'm watching specifically because we haven't seen this price zone in this index since the end of 2003 and the end of 2005.
And what does it tell you? It tells you that we are definitely out of that correction phase?
Well, when you look at other components, let's say the NASDAQ, the S&P 500, the transports, the Dow transports, the Dow Industrial Average, we have not actually confirmed what we're seeing with the NASDAQ. In a way, it's almost like a modern day Dow theory, where I'm looking at the NASDAQ as another sector to confirm all the other indices. And we're getting kind of not a confirmation by the other components, because the other indices, because we haven't made those recent highs yet. So I'm kind of watching this, specifically the semiconductor index of 560, as an area of, are we going to break through this level here, or is it going to act as a resistance zone as it has been going back 11 years, more or less, on a time pattern? On a resistance zone, you put a horizontal line across those two, those three corresponding peaks we have right now. Now, we got to see what happens with that, and if we pull back from here, I'm watching 550 as a spot, which is not too far away. It's only 10 points down. As a C, like, I want to see what kind of price action, what happens when it gets there. Ultimately, if we do have a further pullback here, 510, 500 is an area in the stocks I want to watch really closely on a longer term trend, to see if we have, if whatever kind of pullback we have in the overall market, if the market's not done having its correction yet, which technically I don't think it has yet, because we haven't made those new highs yet. We're kind of just reacting off lows.
Yeah, and the S&P 500 stopped really shy only yesterday 1 point to the all-time high. So that means that resistance is really holding.
Yeah, so now we're hitting these technical resistance levels where we're having relief rallies up to where we were, but, are we confirming, are we breaking out yet? Now, the stocks, I think, is an important sector, because that is going to be the catalyst to the whole NASDAQ, I think, because it's been acting well. I've been following it for that specific reason. And if we can, break above 560, and, you always want to put a couple of days of trading as a filter for, to kind of prevent a false breakout, a bull trap, so to speak. So you say, hey, one day, or even for the first, after the half hour trading today, we're above 560. It doesn't matter. I want like 3 days. I want 3 days confirming above it, breaking out, good volume in the individual components that are involved in it. And if we have that, I think that's good, because, again, then we could get up to the next level of resistance as a peak back in 02 of 641. And we all know where this index was if you look on a chart back in .com days. You're talking over 1,000 in it. So, I mean, let's see what we do from here. I don't want to get too optimistic, but I like it. I like what it's doing, and I have my price points where, if it does pull back and we have a correction, deeper correction in the market going on here, where I really want to watch and, wait for that pullback zone.
And if indeed the correction is not going to happen, and it's widely expected, we have talked about it many times from the market. If it doesn't happen, could it be that we might have a deja vu with the 2013, a year that it was even better than people expected? Everybody, even last year, I remember they were waiting for that correction, waiting for those chances, for people to go back in the market, and we ended up with 30% up. Could it happen again?
Yeah, and I think it can, and I think that's the situation that we're kind of facing is, traders or investors, they're waiting for those great points to get put in, But I mean, I think you just stick with your financial advisors, talk to them about it if you've missed this. Specifically look at, don't go all in at once if you're going to do it. If you thought you missed it, you allocate a little at a time. I mean, during a correction like this, that's what you're supposed to do. That's the modern day portfolio theory that, people have been following for years. You allocate a little.
We have the entire year anyway ahead of us.
Yeah, and technically, like I said, we're kind of correcting, but, we've rallied nicely off of certain spots. I want to see the NASDAQ and the SOX kind of break out and confirm. If not, at least I know, if we do have more of a pullback, we retest the recent lows we had again, if that's the case we're looking at. See what it looks like when we get down there, and then kind of allocate what you want to when you can, in the process. Just try to reallocate a little bit at a time, and I think that'll be okay. But it can be deja vu again of 13, and the reason for that is people are kind of on the sidelines, maybe still waiting for that pullback, and we have these situations where the traders are looking at certain price points. Is this a place to liquidate a position I've had or not? And it's a tough situation, but if you just kind of look at your technicals and wait for these certain levels to give you confirmations, I think that's good. And focusing on the leaders that have been helping the market go up, I think the semis is a spot to watch. Yeah.
Also because fundamentally there is not much on the horizon, maybe just political tensions around the world, Ukraine and Thailand, maybe those could be catalysts, but otherwise it seems that we are going through a period of calm, with the Federal Reserve confirming that they'll stick with Bernanke policy and a good earnings season that we have seen, in the last quarter, and also Washington, they sort out, at least for now, the debt ceiling.
Yeah, and I think that's another thing you watch the media headlines is that through this whole rally we've had, this whole trending up we've been doing, what was the fear in the marketplace at the time? What was the headlines? What was the fear out there that's creating the pullback, the catalyst for that? And was that fear great enough to break the upward trend line of this market advance? And looking back and testing and seeing headlines and what the effect on the indices were, the answer is no, the fear wasn't. There was opportunities to buy. So you kind of gauge it and take it as what it is. Don't let the fear don't let the emotions drive your decisions. That's the worst thing to do. Warren Buffett is a great investor, historically, and he's the guy who says he's greedy when everyone's fearful, and fearful for when everyone's greedy, and that's a great mentality to have.
Even though he doubled his put on the market for this year, so he might be the one that is expecting the market to go down this year.
Well, you got to look at where he entered into. Exactly. So that's he's talking about someone who might want to take some profits. I think it would be wise for him to do that. But again, you just got to look at those kind of things. Watch the levels technically. That's what I like doing. Look at the headlines. Don't avoid them. But kind of just gauge. Are they really, the headlines is going to crack the upward trend or not? And that's, you just kind of stick with your numbers, stick with your levels of support, and see if they break. If they break, then If they don't, then you're okay. So that's what I'm sticking with. I'm looking at the SOX. I'm looking at the NASDAQ for leadership in this overall rally still.
Perfect. Good luck.
Thanks.
Thank you very much for being with us, Derek.
Pleasure. Thanks again.
E grazie a voi per l'attenzione. A domani.